Okay, I'm Idris Muhammad Awal. I'm the host for this class. We're actually going to be looking at a model from the ICT concept. So ICT concept is a trading strategy that have a lot of trading model. So you can pick any model you feel that is easier for you that resonates with the kind of person you are, then you start trading using that model. So there are a lot of models out there or that ICT taught. Then he has a lot of students that have picked some model because that is what they spot easily when they do their back testing. So the last mentorship I taught you guys the market and structure shift model, where you enter after a market structure shift, then a retracement back to a fair value gap, you pick your trade. Now this concept, this model, this mentorship, we are actually going to be looking at a liquidity based model, how you are going to be hunting for liquidity and pick your entry at total soup, or what is known as liquidity grab. So before we proceed, I want you guys to know that the current price, the current exchange rate for $1 to Naira is around 895 Naira. That's the current exchange rate. And you see, very soon now it will get to $900. 900 Naira for $1 very soon, and it will get to a time where $1 will be equivalent to 1000 Naira. Then for you to get $50, you need 50,000 Naira to get $50, and for you to get $100 you need 100,000. The painful thing is there is no job in Nigeria that increases your salary as dollar is increasing. Painfully as it might sound, when dollar is increasing, even locally produced goods also increase. And I don't know how dollar affects the price of garri. I don't know how dollar affects the price of oil that is produced in our locality. So you see, at this point, we need to be earning in dollar. If you guys are earning in dollar, you are truly not going to feel the impact of this economy. And the way the country is going, you see, it is very difficult for people to even find lucrative jobs. And those who have found lucrative job are stressed. They undergo a lot of stress more than the payments they get at their offices, which is why whatever skill you can be able to afford online, try to afford it and try to learn as much as you can from that knowledge, because once that skill starts paying you, you won't care about the economy of this country anymore. You won't be depending in government anymore. So that being said, Forex is one of the only profession, or one of the many professions in the world that can make you a millionaire overnight. And Forex is one of the many professions that has produced the highest number of millionaires around all ages. You find young teenagers that trade forex, millionaires. You find seniors, the adults, the elders who are already at their 50s. They started trading 1 or 2 years ago, and today they become millionaire at 50. And you find women that don't even go out of their houses, that don't depend on guys. Because of their trading forex, they are now millionaires. So you see, forex is one of the professions that makes a lot of person millionaire, irrespective of your gender, irrespective of your sex, irrespective of your age, irrespective of your race, whether you are black, whether you are white. Forex is the only job that has made a lot of persons millionaire. And there are a lot of persons who believe that these things don't work because of the manipulation in it. Yes, it will not work for you if you are coming into forex with the mindset of getting rich quick. Because if you are coming into forex with the mindset of getting rich quick, you won't settle down to learn this thing properly. Me mentoring you today, it took me a lot of time. The time is not that long, but the pain I endure trying to perfect this craft took people 12 years. There are people it took them 10 years to perfect their own craft. But because of the resilience, the determination I put in learning this thing, I was able to learn this thing and perfect my own model within 2 years since I started trading forex. You can do it in months only if you did not fall into the hands of those persons who don't even know what they are doing. A lot of forex traders today, they fell into the hands of people who don't have a good marketing strategy, not marketing strategy per se, a good forex or a trading model. They don't have a good strategy. They are trading one kind of retail strategy that will give them reward one day and take away from them many days. A lot of us have fell into the hands of people like that. They show us one of their results, one of their successful day, and we fall for it because we all want to make money quickly. The truth of this matter is, I can show you how you can be able to make money within months of learning this strategy. And yeah, I can do that for you within months, but you will be the one that will determine if you want it within that month or you want to take time before you become who you are destined to be or who you want to be. I have a lot of students. Some have already mastered this concept, but they are still struggling. I have some who have mastered this concept and they are doing well. And I have those who are too lazy to even watch some videos, some recordings, some class I did. Now, you don't expect me to make people like this millionaire overnight. You don't expect me to make people like this to understand this concept the perfect way they ought to understand the concept. No matter how good a strategy is, if you did not put in the effort of time, patience, resilience, you will never be able to make it in this journey. So after attending classes, you go back, do a lot of back testing. When you do a lot of back testing, that way you can become profitable and you can become who you ought to be in this journey. Now, the concept that is born under the ICT concept, which is a liquidity-based model. We are going to be hunting liquidity. Now, what I'm about to teach you is not something, or I won't call it the Holy Grail, but I can assure you that this model is a model that will give you 80% success rate in the market. I'm not ensuring you that you are going to be profitable after this class. Like I said, it all depends on you. It all depends. If you want to be successful, I can impart the knowledge, I can teach you, I can show you how to do it. In fact, for you to understand that this thing is not something that one can force you to be successful, is, I think it was Thursday, I dropped a setup on Thursday. I did an analysis on Thursday that this is where I'm looking for to buy gold on Friday, or was it Wednesday, and I said this is where I'm looking to buy gold on Thursday. A lot of you saw that post, a lot of you participated in that. I saw a lot of people viewed that post, but it was only one person that came to me that said he picked this trade at that point where I picked that trade. Which means a lot of people are only there waiting for you to tell them buy or sell. Even if you show them where the setup is, they don't know what to do. And these same people have gone through my lectures. They've seen, I've taught them, I've done it over and over again for them. But because they've not put in that work, they are not able to spot the setup. They just want me to say, I'm not saying that's what they actually want, but what it means is, if I had told them to buy, they will buy. But because I did not say buy, they don't even know that that point is where they needed to buy. So you see, I can impart the knowledge, but I can't force you, I can't make you to be successful. It is you that will determine if you want to be successful or not. Which is why, after you've learned any concept, you have to backtest it. Not just backtest last week and price action and you say, wow, this is good, this is good. No. Backtest years back, month back, weeks back. Do a lot of backtesting. Then try to prove to yourself that this thing works. Not because of I've taught you, I say this thing works, then you do the same thing. Because what a lot of you are fond of is whenever I do analysis in class, you always go back to that same pair I've analyzed, you analyze it again and start sending me screenshots in my DM saying, yes, boss, I've gotten this. No. Whenever I've done something for you, let's assume I use Euro USD to do analysis in class. I want you to go and look at different pair completely. In fact, it may not even be USD pair. It may even be a synthetic pair. It may be a indices pair. It may be a crypto. It may be crypto pair. Just go on and do your own analysis. Try to validate what I've taught you in class. And come back to me and say, this thing you taught me does not work. Then we'll look at it together and see if we can be able to validate your claim that this concept doesn't work. Don't just accept it like that. So without wasting much of our time, let's get into it. So The first thing we are going to look at is market structure. So let me quickly share my screen. The first thing we are going to look at is market structure. So I believe most of you have watched my videos on market structure. Then if you've not watched the video I posted in the group description, you better do it between now and whenever the next class or the next mentorship we hold. So when I explain market structure, I explain market structure to be what? Low, high, lower low, lower high, lower low, lower high, lower low, lower high for a what? Sell trend. Now when this market is selling, this is what most of us see. Market move from this point high here to this low here, then a retracement to premium and take out this structure, retrace again, take out this structure, retrace again, take out this structure. This is how a lot of persons see the market, and a lot of people, this is only what they want to be seeing. The market should keep on going down like that. They don't know that market normally get to point of exhaustion. When the market has exhausted all its energy, it will reverse. But this is how I view the market. I view the market structure to be something like this. Retracement, liquidity grab, drop, retracement, liquidity grab, drop. This is how I view market structure for a sell trend. Now, then for a buy trend, we have this low formed, then the low taken out, movement up, retracement, liquidity grab, movement up, retracement, liquidity grab, and continuation. This is how I view a buy trend. Now when you are profiling the market move in trends or in ranges. Market move in trend. Market is either trending or ranging. When market is trending, you will see the kind of move I just explained right now. Then if market is ranging, you see market will form a high. Let's say this top of this square is the high and the bottom is the low. Then you see market trading inside this range and not moving away from it. Market will be trading inside that range and not moving away from it. That is what we call a ranging market. Now whenever you see a market ranging like this, it forms a high. Let's say this is a swing high here, then a swing low here, and the market is trading inside this range. You are not allowed to participate inside this range. You are waiting to see where the market is going to burst out from first. When the market purge the low, then you start looking to trade the market back to this high of that range. Now this is one of the market profile. Market have two profile. Ranges. Market is either ranging or the market is trending. Market is either ranging or market is either in a range or the market is in a trend. Now the setup I love the most is when the market is ranging. This is the one I love the most. When the market is trending, this market is very difficult, or not that it's actually difficult. A lot of persons will get stopped out trying to pick the market at the right time, or trying to pick the bottom or top when the market is trending. And sometimes when the market is trending, it hardly retraces or it doesn't retrace easily. And when the market is retracing, you will think that the market has changed trend. So that's the problem with trending market. So I like to see market ranging. When market is ranging, it's easier for me to pick this setup. It's easier for me to frame my trade completely from the entry down to the TP. Why? Because if the market is ranging like this and it purged this high first, I have two options. Either to take my TP at the leg that purged that high, or I target the opposite end of the trade. This is even if the market is supposed to be bullish. If the market purged this side, I can target this side before the market continue going up. This is the profile I love the most, ranging profile. Then in a trending profile, market is either trending bullishly or market is either trending bearishly. Now, if the market is bullish, how do the structure occur? When the market is bullish, the structure occur, a bullish structure. When the market is bullish, you observe that the market rejects low and it breaks the high. It rejects low and it breaks high. What I mean is, this is a swing low and the market was supposed to be bullish. You see, when the market goes below this low, it will quickly reject at that low and quickly break this high too. Then when it's retracing, it will form a swing low, reject at that low, that is, grab liquidity and reject at that low, then break the high again. And this is what the market will continue doing, rejecting low, breaking high, rejecting low and breaking high. And you will continue maintaining that trend until you start seeing the market rejecting highs and breaking low. That brings us to what? Bearish trend. When the market is bearish, you will see the market rejecting highs, breaking lows, rejecting highs, breaking low, rejecting high and breaking low. Now these are the two type of market profile we have. So now when you are looking at the market, you want to be looking at the market in terms of what? The structure, the order flow. What I mean by structure, the order flow. Is the flow a bullish flow or is it a bearish flow? It's very easy to observe observe the flow of the market. And if you are looking at the market structure, please always look at the market structure at higher time frame. Always look at the market structure at higher time frame, and I will advise you to always look at the daily. Now, if the daily is not too clear for you, that is when you should go to the weekly. Now, if the weekly is not too clear, then you go to the monthly. Now, that's how you keep on going. You keep on going. So now, let's talk about the analysis. Now that you've understood what a marketing profile is, market is either ranging or the market is trending. Now, if the market is ranging, you know what you want to see. And if the market is trending, you know what you want to see. Now, how do you apply this on charts? This is where we come to the main thing we do daily on charts. Now, when this market is moving, let's use bearish as example. When the market is moving, we have this high, and this high has been violated, rejected, and the low is being broken. If you have missed this entry where the market rejected, all you are looking for is what we call OTE. What we mean by OTE is what? Optimal trade entry. An optimal trade entry is a kind of retracement. Now, when the market has formed a high like this to a low, the market is at a discount. Now, when the market retraces above 50% of this range, this high to this low, when the market retraces above 50%, let's say this is 50%, the market has retraced back to 50%, then the market is at a premium. Now that the market is at a premium, let's assume this is a higher time frame, fair value gap, order block, or breaker block. Now, once the market is here, you want to go to a lower time frame and look for liquidity grab. Now, this is the model. Now, the model is, please write it down. Number 1, high time frame PDRA. Before you ask me what a PDRA is, PDRA means premium discount array. You can replace array with point of interest, premium or discount point of interest. Now the model is high time frame PDRA, lower time frame liquidity grab, then lower time frame. You can say and you can use these two options. Then if possible, you can use another lower time frame option, that is, you go to another lower time frame for your entry. And this third option will come if you are looking for market structure shift. If you are looking for market structure shift. But if you are not looking for market structure shift, these two checklists are enough. High time frame PDRA, lower time frame liquidity grab. These are the only things you are looking for in the market. With everything I have said so far, I've already explained the model for you. Now, if you are still struggling, it's because if you are still struggling to understand everything I've been saying currently, it's because you've not gone through the videos I posted in the group, or the video I pinned in my group description. Now, this is everything you need to know. Market structure. What is the market doing? Is the market trending? If it is trending, what kind of trend is it? Is it a bullish trend or a bearish trend? If the market is not trending, then it must be ranging. And if the market is ranging, this is where a lot of our patience will be tested. A lot of our patience will be tested. And one thing I forgot to say at the introduction is that I want you to know that this model is a model that will require you to wait. You have to wait a lot. And this is a model that if you pick your entry right, only that entry is enough for you for that week. Because it's a model that will make you pick from the low of the week, low of the month. I won't say low of the year. I won't use that. So depending on the type of trader you are, whether you are a swing trader or you are a day trader, I'm not a swing trader. I'm a position trader. I trade with my target. Once my target is reached, I am out of the trade. The only time I leave my trade is maybe I just want the model to complete. When I'm trading a particular model, I have different model I'm using. When I'm trading a particular model, I like to see that model gets to the end before I close the trade. Not that I've not closed some position. I've already closed my position based on my RR. then I will leave at least 1 or 2 positions to be running to complete the model. The only thing I don't do is I don't take trade over the weekend. I don't do that. And I don't even like taking trade to the next day. So that's it. The market is either ranging or trending. And if the market, once you've recognized what the market is doing, all you just need to do is the flow of the market. Is the market, has the market reached a PDRA that would make the market want to retrace, or it will cause a reversal. Now, when the market has gotten to, so now you want to know if the market is at a premium or a discount of a range. So now I will start sharing my, I will start, can you guys still see my screen?
Yes, we can hear.
So I will start showing you charts now. But before I show you my chart, I want you to understand what a premium, what a, I want you to understand what a dealing range is. Now, when market is moving like this, and this high has been taken out to grab liquidity, then it rejects and break this low. Now, your new daily range is from this high to this low. The swing high that broke this low. Are you getting it? Now that's your dealing range. Now, if you are looking to enter the market at retracement, you want to enter the market at the retracement of the above 50% of the daily range. Now, if you are looking at a bullish condition, this is your dealing range. Let's assume you have something like this. Now, this is your dealing range, not this low. This low is your dealing range because it is this low that broke the structure. So this low now, it's now your dealing range. Or you may have something like this. Now, this low here is your dealing range. Now, you are now looking at the PDRA below 50% of this range. Below 50% of this range. Now, if the market retraces below 50% and move again, this will now be your new dealing range from this low to this high. Then when the market is retracing, you want to see the market retrace at least below 50% and continue the movement. Now, mind you, when you are looking at reference points, we may get a fair value gap here, order block here, and swing high here, and the market will come for this swing high, and swing low. This swing low is also a reference point, a point of interest. So always note that. So once that liquidity is grabbed, the market will continue moving up. Just know that the market is always going for liquidity. And the easiest way for you to know the liquidity the market is going for is for you to use the higher time frame PDRA and lower time frame liquidity grab. That is the model. Now let's go into our chart. Enough of the talk. Let's go into our chart and try to implement all these things in the chart. Now let me quickly remove everything and let's make our chart lively. So before then, let me quickly answer some questions that those guys asked me in the class. Why I drew this fair value gap on the weekly time frame. I think it was Thursday or Wednesday, I can't remember. The body of the candle is somewhere around here. Then I said if this wick close below this low, it means we are going to see the market taking out this low before going back to that high. But if But I was so sure that the market was going to go back up. That was why I gave you that. That was why I gave you that setup, that this market will come to this daily fair value gap. Remember, what is the model? High time frame PDRA, lower time frame liquidity grab. Now, I've already taught you. Time frame blending. What time frame do you blend with D1?
We blend a higher time frame with 2 times lower time frame, sir.
We blend the higher time frame with 2 times lower time frame. So now this is our PD array, higher time frame PD array, which is the daily. And you can see this is that leg that broke the structure, right? Can you see this low to this high, right? And you can see the market has moved down towards a premium. As you can see, the market has moved more than 60% of the range safe. Let's see. This is the low. You put your fib at the low, then to the high. You can see the market has retraced below 50%, or even below 62% into this high time frame PD array, right? Which is the daily PD array. Now you can see, what can you see here? This is a low.
Liquidities.
This is liquidity what? Grab. Isn't it?
Yes, sir.
Now,
yes, sir.
Liquidity grab inside what? That high time frame PDRA. It's as simple as that. We are done. We are done. You've already seen your entry. So you can enter your trade. Now, the only thing you just need to do now is to see what level can you pick an entry that will suit a better stop loss. Now, this is where you have to reduce your this thing. If you can't, you can just go to H4 and see. Now, I said something about this low the other day, that at this low, this will be my invalidation area. That I so much trust this low that once they come below this low, it means this setup has failed. Now, I trusted this low to be my stop loss. Where my stop loss is. To you, that stop loss may be too high, but I'm seeing it as an invalidation area. So I'm not seeing it as what the stop loss is too high. I don't care how many people right now. That the market may not even get there, but this is my invalidation area. The market might even come to this point, but if it goes below this low, my setup has been invalidated. So that's what I mean by invalidation. So you can pick your entry immediately that liquidity is grabbed and look for somewhere to place your stop loss. And you can see when we look at market profile, what do we say about market profile? When the market is bullish, you will see that the market is rejecting lows and what? Breaking highs. Can you see? It has rejected from this low and it has broken the high. Now, if you enter here using liquidity grab model, you've gotten, let's see how many pip is this. I pick this trade and I hold this trade down to this point. Now let's see how many pip is this. This is 188 pip. No, I'm not even count it well. I'm coming from the low. I did not enter exactly at that low though, but this market moved 193 pip. That's what the market moved. But my entry was somewhere at this low.
178 pips up.
177. You see? So,
Yes, sir.
And how was I able to? Where did I exited it? I exited this trade at this volume imbalance here. This is where I exited the trade. and you can see it's exactly above 50% of that range, of this full range, this low here to that high. So I exited what at premium. So you can see the model is that simple. It's not difficult. All you just need is patience. You need to wait. If you can wait, then you will surely be rewarded. Now, this is the high time frame PDRA, lower time frame liquidity graph. Now, let's look at the structure again. Rejecting lows, right?
Yeah.
This low has been rejected. Then the highs are broken. Can you see? The high is broken. Now the lows that is rejected is not the low at premium. All these lows, they are at premium. Can you see? They are at premium. We are not looking at the premium low. We are looking at a discount low from the leg that initiated the move. This is the origin, or use this one as the origin from this point to this point. Then a deep retracement that took out a low, rejected that low and break highs. You can see at this point again, the market is ranging. Now this is the type of, I told you, market is doing two things. The market is either what, ranging, or is what is trending. Now look at this mode market. This market is ranging here. Now when the market was ranging, it created this high and this low, and the market was ranging inside that high and that low. Let me draw it out. See, I'm using one pair to explain everything I just explained to you guys on that whiteboard. You can see the market is trending. It's ranging, sorry. Now, when it broke this low, did you see the market buying?
Yes, sir.
A lot of you will chase this. A lot of you will chase this, but I will not chase this trade because this is not a high probability trade. Why won't I chase this trade? Who can tell me?
Because it is not on the discount.
Very good. Because the market is not at discount. Now, how do you know when the market will be at discount? All you just need to do, look at all this fair value gap. This is one. And even though you are not looking at this fair value gap, this box here you are seeing is a high time frame PDRA weekly fair value gap, right? It's a weekly fair value gap. Now look, from this low to that high, can you see this low? From this low here to this high here, the market has taken out liquidity and traded into what? And traded into a high time frame PDRA below 50%, right? Now, what did you see there? You've seen what? The market rejecting lows, right?
Yes, sir.
What?
Yes, sir.
Breaking highs. Can you see? Now, this is where you enter your trade. Liquidity based concept. High time frame PDRA, lower time frame liquidity graph. Your stops can be somewhere here, but if you see this one as too big, you go to the 1 hour and look for a better stop loss. Now you have a fair value gap here. Now when you have a fair value gap like this is the fair value gap, right?
Yes, sir.
You can use the low wick of the fair value gap. No, the fair value gap is formed in 3 candles now, right?
Yes, yes, sir.
1, 2, 3. So you can either use this low or this low of this week. And I prefer to use this one because it's the closest. Can you see? or I'll just go to a 15 minutes time frame and look for a swing low to form. Then you put your stop loss. I believe in a 15 minutes or 5 minutes, this will be a swing low. You post your stop loss below it. Now, from this point to this point, it should not be more than 20 pip. More than 20 pip. Now, you are not looking at it at, this pip is too much. Oh. You are looking at it in terms of RR. RR. Now, this RR, it may be too high for you. Then if the RR is too high for you, then this trade is not for you. Are you getting it? If you are not willing to risk because you are not getting, maybe this stop loss is too high, then this trade is not for you. That's why I told you that this concept is a concept that will make you to be very disciplined. You choose a setup, a high probability setup. That's what we are looking for. A high probability setup, a setup that will give you more reward than it will take from you. The market may even give you setup every day, but as a professional trader, you are not supposed to be trading every day. You are supposed to be looking for the highest probability trade to pick. Now, if you look at your stop loss, you look at the reward that the market is likely to offer, and you see that no, this is not the kind of trade that will benefit you, then just leave that trade and don't even touch it. Leave it, don't touch it. Now, what did you learn about ranges? Now, you see, whenever the market is ranging, I always come up with that statement. What have you learned about range? And this, I'm always saying this thing because when your teacher is teaching you something, or when you are following somebody, if that person is saying something over and over again, it's very difficult for you to forget that thing. And whenever you see that thing, that will be the first thing that will come to your mind. What have you learned about ranges? Now, whenever you see a range, that's the question that should come to your mind. The first thing you are looking for is a purge. Now, preferably, you want to see the purge against the trend, sorry. Now, if the trend is bullish, you want to see the purge, liquidity purge against the trend. Now, we've gotten that liquidity purge against the trend here. Now, what do we do? How do we frame our setup? You look for 50%. Sorry. Where is it? Now, you look for 50% of that range. Let's assume this is 50% of the range. Now, once you enter your trade, your first target is what? The leg that your first target is the 50%, or the leg that what broke, that purge the range, the leg that causes the purge. Now, this is the leg that causes the purge. This swing high is what causes that purge, right? So it can be your what? Target. Now, how I frame my setup when I'm seeing ranges is what? My first target is always at the 50%, or if the leg that purged the liquidity is below 50%, that will be my first target. But if the leg that purged the low is above 50%, it will not be my second target. So my first target is 50% here. The second target is what? This high here. And the last target will be the opposite end of the range. Are you seeing? That's how to pick the trade. This is the most easiest for me to do. That's why I like ranges. It's just like a bread and butter setup to me. So, is that clear? I've explained the whole model in just an hour. I've explained the full model in just an hour.
Boss, please can you come again with
Yeah. I will. I wanted this class to be in the morning actually, but a lot of persons were saying they are going to work, they are this, that. That's why I made the class this night. And we have some South Africa, we have some persons from Ghana, and we have some person from what's that trace country again? Kenya. And currently Kenya, they are 2 hours ahead of us. This is already 11:41 at their own end. So those people from Kenya may be sleeping. I don't know. I keep getting interrupted by calls coming into my phone. I've already disconnected my I've disconnected my call line, but I think I still get calls. Okay. Now this is everything about the model. This is everything about this particular model, liquidity-based model. A liquidity-based model. Now we have the market structure shift model. To me, I feel the market structure shift model is the easiest or is the safest. Let me just use that word. Is the safest for beginners. I know after this class, a lot of you will want to start picking this liquidity graph, and you guys will painfully do it wrongly. I'm not saying I'm not. You guys will do it wrongly, and some of you, especially those that don't even have this knowledge completely, you guys are going to do it wrongly because you want to start chasing every highs and every lows and every fair value gap and every distance because we have what we call draw on liquidity. Now let me go back to let's assume the draw on liquidity was already met here. This 50% would be bullshit. It will just come for this low. But at this point, the draw on liquidity was not met here. And I believe I drew this draw on liquidity for my students. I told them that this high is where I'm expecting this market to get to. And they all knew that I was buying gold until gold took out this high and started rejecting back to this point. They all knew that I was buying gold until gold took out this high. So you see, this is how you frame the market. And why did the market retrace like this? If you look at it, this is a price leg, right? High. Market reject high, broke low, right? Reject high and traded into a discount. But the overall trend, this is a higher time frame trend. The overall trend is bullish. So the market is even a kind of retracement on this daily time frame. It's a retracement back towards a discount of this range. And it's got to this, we can call this one a flip this and breaker block here and going on back up. So you see, the draw on liquidity I'm looking at is this equal high. All this equal high. This is where I'm looking at before gold becomes overall bearish. This is what I'm looking at before gold becomes overall bearish. So I know some of you will want to hold gold till gold get to this high. I don't know. It may not even get to this high this year. I'm just saying, but I trust that this high is what we are looking for. So now let's look at EU. I promised I would do DXY correlation with EU. So probably we're going to fix another class for that one. But let me just quickly do this. At this point, some persons were already buying EU. I was selling EU. But when EU got to this point, I stopped selling. And I mentioned in class that and you guys knew, I have said this many times, in a bearish or bullish week, your best day to be bearish is Monday, Tuesday, and Wednesday. Even if you are bullish, your best day are Monday, Tuesday, and Wednesday. Most often, reversal will occur between Thursday and Friday. Are you getting it? So that's why when I'm in a setup, Tuesday and Wednesday, okay, are enough for me for a particular trend. So if you are trading a model like this, you should know that you will not get set up every day. You are always looking for the highest probability trade. You are not looking for what's it called? You are not looking for you are not looking to pick trades every day. You are just looking for the highest probability trade. Now you can see the market traded into this daily fair value gap. Traded into this daily fair value gap. Can you see this daily fair value gap? Now the market traded into this daily fair value gap, and what happened? It broke. It rejected this what? This low. And before that, I told them that I don't want to be bearish anymore, because at this point I'm expecting the market to be bullish, but I'm not buying the market on Thursday because we have NFP on Friday, and I don't want to be participating in the market after London. Now, to me, I believe this is my drawn liquidity, and this is a high time frame PDRA, which is the other block. And I believe this is where we are coming on EU, this low. This is where we are targeting. And I still believe that we are going to get to this low. Now, what I'm expecting to see is the market should reject and start selling from this high. Now, please mind you, when I call a price level, my analysis can change anytime because I'm always inspecting the price. My analysis can change anytime. I may tell you, okay, that this market will sell here, but you see me selling the market from here. And that's because of what something happened here that did not meet my expectation. Then I start picking. Now, this is what I like to see. This is an order block, right? Let me highlight the order block. When I'm looking at order block, I'm always looking at the body. I'm looking at the body, not the wick. This open here and the 50% of the order block. That's the mean threshold of the order block. The body, the open. This is the open of a bullish candle. So this is my order block. That's where I plug. Because of I already have this green line here. That's why I'm not using a green line here. So this is my order block. Now that I have my order block there, on a lower time frame, what do you want to see? Liquidity grab, right? And you see liquidity resting above that PDRA. Now we have what we call breaker block also here, and you can see we also have a fair value gap inside that PDRA. So this is a very strong area to expect a turtle soup, a liquidity grab. So now I'm not saying the market will just move like that and enter into this thing. Preferably, I want to see this thing happen on Tuesday or Wednesday. I don't want to see it happen. I don't want to see this thing happening on Monday. If it happens on Monday, I'm not picking it. So that's why also, apart from the fact that you read price, timing is also important. Timing in the market is also important. We have what we call kill zone. A lot of people abuse ICT kill zones, London kill zone. They don't even know how to trade using they don't even know how to trade the kill zones. And that is something that I don't plan to teach in this mentorship. So it's very, and time is one of the most important. In fact, time is important than this price action you are seeing. Time is important than these price actions you are seeing. if price did not meet, let me tell you why time is important than price. And let's assume this is a price level, right? And we have something like this, the market moving like this. Then let's say Michael bought this market somewhere around here. Then the market did this. You see, Michael has suffered a lot of drawdown, right? Then the market did this. Then Frank bought from this point. Now, let's say this was last week, Friday. Last week, Friday, New York launch or London launch hour. Then this is Tuesday, New York kill zone. Now you can see that Michael and Frank bought at the same price level, but Michael suffered all this drawdown while Frank did not suffer any or a little drawdown. Michael did not suffer any drawdown. Sorry, Frank did not suffer any drawdown because what Frank bought at the right time, while Michael did not buy at the right time. So this is why the time is important than price. You have to wait for time to meet, for price to meet time before you buy. If price has not met time and you buy or you sell, then you are wrong. That's why I tell people that are waking up by 2, 3, 4 to pick trade. You guys are just doing rubbish. You don't even know what you are doing. Hey, person will wake up. That when we're trading BTM, that's what we normally do. We wake up just to pick high and pick low. So please stop doing that. I will teach the kill zone maybe in another mentorship, or like I said, once my YouTube channel has gotten to 1,000 subscribers, I'll start dropping premium content. So time is very important. You don't just pick time. So the times we have, time is not just London kill zone and New York kill zone. We have what we call time of day. London, New York kill zone is just one part of time of price. We have time of day, days or day of week. That's why I say Monday, Tuesday, Wednesday are your highest probability days to buy in a week. And we have day week of month. There are some weeks that are just bearish in a month, and there are some weeks that are just bullish in a month. So go to your chart, you'll see this. So I don't need to explain that. Now this is my draw on liquidity. So this is where I'm expecting the market to start selling from again. But if the market breaks this high, we'll now just look for a kind of retracement, liquidity graph, and continuation to this high. Are you guys getting it? So this is how to look at price. And I think this is all I'm going to say for now. So you can see I'm using only bullish price action. That's because the pairs I trade the most is Euro USD, GU, and gold. So I promise you guys one day or some other time I'm going to do a lecture on indices, because indices have a different way of trading them, though it's the same concept, but they have their own timing in the market. So they have their own timing in the market. You don't wake up in Asia and start trading indices. It doesn't work that way. So this is it. If you have a question, you can ask your question. If you don't have a question, my personal assistant is going to drop an announcement in the group later today or tomorrow. But I believe, and the announcement will be for those who want to further their knowledge in this liquidity-based concept. Now, this is a concept I assure you. Okay, before that, let me quickly explain something. And you sometimes you see when I'm talking, I'll see some people doing something else. I'll just ignore them. I'll just keep quiet and I'll ignore them. Now, when we are looking at range, let me just quickly explain what a range is. A range is when a high is formed. You can see the swing high, right? Let me draw it out. You can see the swing high. Then you can see this swing low. This swing low here. So at the moment, let me quickly remove this swing low. You can see it, right? Now, at the moment then, I told them there is a range here. Now, what have you learned about range? I'm just telling you that there is a setup I'm looking for somewhere here to buy. And you guys all saw that I bought this market exactly at this point. And I hold this trade for complete 3 hours. I picked this trade somewhere around, I think it was somewhere around 10. That's why I picked this trade. Then 11, 12, 1. Can you see? I hold this trade for complete 1 hour. This is where I picked it. Somebody say I did not use a stop loss. My stop loss was here. I can use, this is the one I was looking at actually, this particular low. I told you when I'm looking at the kind of fair value gap, this is what we call RDRB, redelivered rebalance. This is a kind of a PDRA also that I've not talked about. I learned it from one guy on Twitter. So RDRB, RBRD, rebalance redelivered PDRA is it. So this is where I'm looking for this trade to fail. Had it been this low was taken out, then I'll close this trade. I will look for a liquidity grab here or here. But this is a range, right? The market was trading inside this range. And I told you that there is a semi-range inside that point. You can see the range here. It's semi-range. Now, the reason why I call your attention to this range is not because you should buy or sell when you see a purge at that range. But I saw some persons, they were now trading like, I don't want to mention his name so that you guys will not think I'm having a beef with him. No, I'm not having a beef with him. I really love him because of the kind of things he's doing in the group. Now, this is a mini range inside that range. Now, the reason why I'm calling your attention to this range is for you to know that you can get a setup sometimes, but not all setup are high probability setup. Now, when I told you about market structure or dealing range, this is a low that broke this high, right? This low broke this high. Now, when this range was purged here, was it above? Was it below 50%? No. You can see it's still above 50%. So why were you buying it? Some of you were buying it on M1, saying, yeah, it is moving. M1 is giving you setup. You are taking trade that is not a high probability trade. Yes, it's a setup, but is it a high probability setup? No. So that's why you're not picking every setup. You're only looking for the highest probability setup. And the highest probability setup was when this low was purged. And immediately it was purged, I bought it. And I did the analysis for you guys earlier in the morning that very day. That's why I say a lot of persons, even if you give them the setup, they don't know what to do. They just want you to tell them, buy, sell. Now, this is it again. Let me show you. Liquidity graph, right? Inside that daily fair value gap, right? This is an order block. This is what? An order block. Can you see? It's an order block, a 4-hour order block. Now let's pair 4 hour with 15 minutes. Now can you see why my stop loss was here? Can you see why my stop loss was here? This stop loss now is that low of that H1 that I pointed out. This low here. This low here. So let's go back to M15. So this is where my stop loss is. I trusted this low. Now this is my liquidity grab, and this green line you are seeing is what? The 4-hour order block, right? Now a liquid high time frame PD array, a lower time frame liquidity grab. Can you see? High time frame PD array, lower time frame liquidity grab. The liquidity is grab, and you pick your trade. Now, where are your targets? Now, if you are looking at a range-based model, the leg that touched the liquidity, target 1, you can see immediately that leg was taken out. They did a little retracement. Can you see? And market continue. And this one happened even before the news. Now, during the news, they came back to that other block and took out this one. So, if you are trading based on, if you are trading the knowledge using the knowledge of range to trade, this is what you should do. The leg that purge the liquidity and the opposite end of the liquidity. This can be your own model. Are you getting it? This can be your own model. You can be looking for this thing every day in the market. Once you see this and you know what to do, this is a very easy model for you. And you can make money by trading this model alone, even though it does not occur every day. You can make money trading this model alone. That is what we call, that's why I say if you have your own model, psychology will come on its own, because this is what you know how to trade. This is what you are always looking for. If it takes weeks before this thing occur, you know that when you are putting your money into this thing, you know what exactly you are putting your money into. Is that right? So a higher time frame PD array, lower time frame liquidity grab, and you buy. So I bought this. I was actually trying to target this equal high, but when you get to this rejection block here, I exited the trade, because rejection block can also be a form of liquidity grab. So immediately took out this rejection block, I closed the trade, and I exited. So guys, that's it. So as I was saying, for those that want to further their knowledge on this, my personal assistant is going to drop an announcement in the group either today or tomorrow. Then you can message him to be part of the next mentorship. Now, if you have a question, you can ask. If there's no question, then we can call it a day. Okay. I don't know of any special software. I will advise you. I will advise you to get a. I don't know how to use TradingView. If not, I would have used it here. So I have a friend that is teaching me currently how to use TradingView on system. So very soon I may be using system to teach. So for now, what I would advise you, if you know how to use TradingView or you have a system, subscribe. System is very easier for you to do backtesting, because you won't suffer trying to go back like this. Very easy for you to go and visit past price action. So let's assume this is a monthly or weekly price action. I mark this thing. It will be very difficult for me to find it here on a 15 minute time frame. So that's why backtesting using MT4 is very, very difficult. Using MT4 to do backtesting is way, very difficult than anything. But you can backtest at least 3 or 4 weeks price action from
4 hour daily to 15 minutes. Now, when you're doing backtesting, all you just need to do is to look for everything you've learned. Look at ranges, look at trends, look at liquidity graph, look at high time frame PDRA, premium, discount, and what is happening. Everything you've learned, try to validate it from past events. Use past events to validate it. Let's assume we have this fair value gap here. This is higher time frame PDRA. And what are we looking for on the lower time frame? Liquidity graph. Let's go to 1 hour and see if we can see it. No. Can you see that there's a liquidity graph here? There's a liquidity graph here. No, so this is a low. This liquidity was grabbed here. So if you have entered this trade and you place your stop loss somewhere around here, this might have taken you out. So you don't need to get worried. Sometimes you will fail. I always say this: you can't do anything about it, but you will always get another opportunity to enter the trade. Now you have this. Let's assume you believe that this market was going to be bullish. You have this inside that same high time frame PDRA. You have another liquidity grab, right? Look at this low. Liquidity was grabbed. Then continue your entry. And this is just the same thing that happened last week on EU. High time frame PDRA. Then do a market structure shift. And I forget to even say something. This entry I did here is a market structure shift entry. This is the market structure shift. Order block, 4-hour order block. Then liquidity grab on a lower time frame. So that's how to do backtesting. Just go try to verify all these things. So if you still don't know what a fair value gap is, then this class is very useless to you. I believe this class is a very useless class for you if you don't know what a fair value gap is. So we have this thing here. We have this volume imbalance here. This could be a potential area to see our setup. But currently, I'm not going to trade on Monday. I may not even trade on Tuesday. So this is volume imbalance. And let me go to 1 hour. You can see it's a PDRA. Also, you can see this leg, your daily range from this low to this high is your daily range. And you can see that volume imbalance is below 50%. So this might be an area where the market will start buying from. So all these things are things that are easier for you to know. So this thing is very simple. The problem with this thing is when you are trading a particular concept, if you don't have someone that is guiding you through, you can't hear me anymore. So if you have a concept that you are trading and you don't have someone who understands that concept very well guiding you, you are doing it on your own, that is when backtesting will be very difficult for you, or your growth with that concept will be very difficult for you. But if you have someone who understands that concept very well and is teaching you, your growth will be easier if you are putting the work. If you are putting in the work, but if you are not putting in the work, your growth will be very, very useless or will be very slow. So that's why you need somebody to put you through. And I have a private group. If you can't even join the private group, you have a lot of persons in the free group who are trying, especially that zero guy ground. Is it Hauki or what is his name? The guy is trying to carry everybody along so that you guys will understand every lesson I drop in that platform. So you can also learn from him also. And I have some students I've mentored inside that group again. They don't talk much though, they are still there. Someone I respect a lot, like Michael. So he's there, and also learn from him. So that's it. Any other question? think ranging is the same thing as consolidation. Mm, okay. Right. So I think this will be the last question I would take. I'm very exhausted. I've been talking for almost 2 hours now. So if you have any question, you can send it in the group whenever I'm free. I will answer the question. Then if you have anything to tell me, you can also say it in the group. But if it's something private, you can discuss it with me in my DM. So until our next meeting, I wish you guys good trading and good luck.